Let's talk about the markets in 3 minutes then, Mark. And let's, of course, start with the data point of the day. We'll return to this theme a number of times through the hour. But in terms of CPI, some people are watching for a moderation in core CPI. Some are watching core services really closely. Some are watching for any clues, of course, as to whether this means 25 or 50 basis points in February. What's going to be key and in focus for you when this data hits later on today?
So I think probably the main message that, even kind of from the way you phrased that, is everyone is expecting a soft print. The whisper numbers for low expectations. And I think Bloomberg economics has been exceptional over the last year or so and has outperformed the street in a difficult economic environment. And Bloomberg economics expect a soft print today, kind of validating the whisper number out there. I think if we get a beat, it would be a massive shock to the market. So the expectation is that we're going to miss what is the official median, because even the late forecasts are lower than the current median. It's because people have consistently downgraded their kind of expectations for today. So I think that for it to really see as a soft print, it would have to come in quite a bit below expectations. There's also, though, a knowledge that the Fed over the next 26 hours will push back. But this is the moment all week has been a market that wants to sell the dollar, that wants yields to go lower, that wants to play the deflationary theme. And I think that's been very clear in the price action. I'm in the camp that that might get a little bit cleaned out if there's any risk of surprise today. But I have to say, certainly the market seems to be skewed against me at the moment.
Right, yeah, it certainly does make things a little nervy, doesn't it, going into the print, knowing that so many in the market expect a certain thing to happen. What about what's going on in the yen? You referenced it there whilst talking about the GMM, Mark. We've seen some big, decent moves in the yen. Do you think this is overdone, though, in the short term? I know that you've been somebody who has been expecting the BOJ to change course on monetary policy. And, of course, we saw a little tweak to policy in December. That set the stage for more changes to come. But do you think the market expects too much in the very short term?
Yes, I think that the market's consensus here is very strong and the logic is absolutely spot on. It is the idea that inflation will come to Japan too. We've already seen signs of that over the last few months, but it is going to be kind of come through in a sustainable way. We're going to get those wage increases. The Japanese economy will hold up okay. And the Bank of Japan will be forced to capitulate on policy and remove its yield curve control. I'm with the market there, absolutely. I think will happen this year. The problem is the market is selling dollar-yen aggressively going into the start of the year on the back of this logic. But the Bank of Japan might not change policy for a number of months still, which leaves the fact that everyone is selling dollar-yen on a move or for a reason that's maybe potentially many months away quite dangerous. Now, if you add the extra layer that buying yen is actually disinflationary, deflationary for Japan, and makes it less likely the Bank of Japan will move, it means that getting premature in the timing actually makes it less likely to come sooner. So I think that move's dangerous. I think that the yen consensus long will suffer badly in the next few weeks. Again, though, I seem to be battling a majority here.
Just a brief word on copper. I mean, it's one of the commodities that has been responding to the reopening trade in China.
Yeah, look, absolutely. I think this is validating there's a real economic push there. I have heard speculation that it might be about some specific position cleaning out, but I think it is a very, very important real-world kind of validation that the people who at least trade that asset think that China's reopening is going to be very strong economically and not going to suffer too much disruption from the health consequences of the COVID wave.
Yeah, absolutely. We wait for any updates there. More on China later in the programme. Thanks to Mark for his thoughts so far. MLIV Go is the function to use if you want to get on top of the Markets Live blog. There you'll find plenty of coverage of the CPI print later today and anything else that is moving markets.